Hello, Oracles. Welcome back to a special Friday afternoon edition live with Vinny, who hasn't been on here in forever. Welcome back, Vinny. Always a pleasure to have you on here.
Thanks for having me. It's been a while. My Model 3 Highland refresh shirt is unfortunately in the laundry, but I got my Cybertruck shirt on here.
Oh, that's awesome. That's totally worth it there because the Cybertruck, we're going to hear about that next. So, it's funny. We go back, with the Highland stuff. I was looking back, gosh, it was December, I think, when we first got the rumors saying that, hey, by the way, in September, we're going to get the Model 3 Highland refresh. And nobody confirmed it, nothing at all. And here we are. So sometimes these rumors end up being true, man.
Yeah, definitely. So what do you think? The new car got stronger, sleeker, better in
Oh,
every
yeah.
way. What do you think? Is it
It was so funny. When Sawyer had tweeted out or posted out the change, the quick video of what they look like differently, the before and after. I was like, man, it looks like me and a lot of people that I know who have been doing a lot of health and fitness this year, working out. It's like the Model 3 did the same thing this year. Everybody's working out and getting fit. And that's what the Model 3 looks like.
Yeah, it looks real nice. I like it a lot.
Yeah, it's almost like a Model S. So and I kind of felt like that's what they were going to go with anyway, as a more of a sleek Model S type look with it.
Hmm.
Oh, yeah. What's going on, buddy? Germany, yeah, and Germany, and looks like Europe is going to be getting the Model 3 Highlands September, October, end of September and October, November. We should be seeing them over there. So that'd be pretty awesome. And then, one thing too I thought about was obviously they learned from the S and the X, where Elon stated afterwards, in hindsight, he wished they didn't take the lines down entirely. So clearly they learned from that because they didn't, they did the upgrades and stuff, but it wasn't like they took down these Model 3 lines entirely. They kept them going. And so I would imagine we're probably going to end up seeing the same thing in Fremont, probably in the next month or so.
Yeah, and it should be interesting too how it shakes up the market in China there, because obviously that's their hyper competitive market, and
Oh, yeah.
this should help a lot because it's kind of hard to sell a 6-year-old product. I was seeing like people are kind of comparing to how that would be like trying to sell the iPhone from 6 years ago there today. So that might change things a lot too. Should be interesting.
That's a great point. I never even thought about that because if you think about ICE vehicles, if you bought a 6-year-old one, it's like, what is the change really? A couple of little things here and then, unless you had like a major model year change, there wasn't anything different. But, when you do look at it from a tech standpoint and look at, Tesla's being basically an iPhone on wheels, that is it. That really is it. You're looking at, you want the newest technology, and sure, some people will still get by with a 6-year-old Tesla, not a problem. It's still going to be a great vehicle, but if you're looking at newest technology, that ain't going to be it. You want something really new.
Yeah, and it should definitely, it's got to open up a bigger market. They've got the nice screen in the back now for the kids. Got added a bunch of useful features for sure. So maybe you'll see that Model 3 demand start to pick back up.
Oh yeah, and then of course, looking at the fact that we know that this whole change was a massive reduction of cost for the vehicle. And with that, once they do get it up to scale, and I would imagine right now they're probably already hitting the ground running. I mean, we know how China operates. They were down for COVID. It took them 2 weeks to get right back to where they were before. So looking at this, I would imagine they'll be right there. So it will not take long before we end up seeing, economies of scale actually hit the Highland and really affect that bottom line. So seeing as they're flipping it now in September, we've got, a month left where we'll see some of it in China. So probably won't see anything massive on the bottom line, but watch out for those Q4 margins. Those might surprise with this upgrade.
Do we know officially like what the specs are for how much they're saving?
No, that I haven't seen yet. Sawyer put out the whole litany of everything that are all the upgrades on it. But as far as the actual costs, no, I did see this 50% of the parts are new though. So
Mm.
that's huge. So I don't know, where that all came from. I don't know if that was in supply chain stuff. I remember, gosh, I think it was in the spring. There were discussions about, I think it was, oh, that's what it was. Is on the Q2 call. There was somebody who had looked at some massive cuts in some of their suppliers, and they were guessing it was probably for the Highland. And makes sense that it would be if 50% of the parts are new. They probably had that massive cut.
Yeah, that makes sense.
Buddy here, can Tesla become the most valuable company in the world? What do you think, Ben?
That's what I'm betting on. I really think so. And something I've been kind of struggling with lately is like, I want to diversify because 70% of my portfolio is in Tesla, but I
I
don't
know
want to sell in, I don't want to sell any Tesla because it just seems silly to me because I don't see any other opportunity that in my view is anywhere close. So yeah, it's kind of I guess a good problem to have, but I think they can do it. I mean, the fact that like they're so far ahead, and I think the most important aspect of the company is this pace of change. Like no one is iterating faster than they are, right? So it's like as long as they're keeping that company culture thriving, I think there are risks to that. Like we can kind of get into, if the company, what it looks like with or without Elon, stuff like that. But outside of that, like I just think that they are going to absolutely dominate. They're just getting started and they're just starting to move into other verticals, which I feel like they're kind of following the Amazon playbook, when we're going to get energy and we're going to get things like insurance, and there's just going to be this flywheel forming of all these different synergies that I just don't see how they can lose.
Oh yeah, I was thinking the same thing, and it's like, my portfolio ironically is 72% Tesla, and I'm like, what do I do? And again, I'm like you, I don't want to sell anything, but knowing what's going on in my personal life, I'm like, I want more cash coming in to be able to buy more, and thinking that we may get a big dip next year with the whole macro environment coming down, it'll give me a great chance to buy more, but I don't want to sell any. So to offset it a little bit, I'm just adding more to my, passive income plays to get more cash coming in for that opportunity later on. And hey, after next year, if we get into 2025 and the stock takes off and Tesla's 80% of my portfolio, so be it. I don't care. But I think the same thing. And thinking about the fact that so many people are looking at potentially 2030, in the 2030s at some point, EV revenue, the vehicle revenue might not even be the biggest. It might not be the biggest revenue stream for Tesla. We can get to a point in Tesla where, the automotive sector is just a small fraction of what they're actually bringing in for revenue. You've got, could be potentially AWS type stuff coming from Dojo. Now, obviously the software revenue coming in from FSD. Energy is going to surpass that for sure. And then Optimus when that comes out. Like, yeah.
Yeah, and that's kind of the way I look at it is like FSD and Optimus, if either of those two things, make it all the way, like we get full autonomy or we get the bot, that alone makes it the most valuable company in the world. But even without those things, like I know that Elon says, FSD is the difference between this company being worth a lot and nothing. But I still think even if FSD is, continues to get better, the take rate is only going to improve, and like they're just going to be bringing in so much profit from that. And they've got all of these other businesses. It's not like the entire company is sitting on whether or not it works out. I mean, I guess you can argue some people think it is, but that's kind of how I look at it. So I don't really give a ton of like value to us getting to it's something like a robo-taxi network, right? But I think there's going to be a lot of utility. People are starting to realize that this FSD is great. You want to go on a road trip and not have to be exhausted when you get there, or you're sitting in traffic on your way to work. There's just so many use cases. I mean, people who are older maybe can't see as well at night. I could go on and on. So I think it's something that is going to become increasingly useful, and people will start to realize that. And then going back to like what you were saying about next year, if there's one thing I've come to realize, going through 2022, when the economy is like the worst it's been, and yet the market this year came back, I just feel like the economy and the stock market are not the same, and like it's just impossible to predict. Things could get worse and Tesla could go up. Like it is complete like not really correlated to reality.
Yeah.
But there's definitely concerns there too. But I feel like the best thing to do is just, if you want to keep buying, dollar cost averaging, having maybe a cash pile that you build up on the side. Maybe that looks like whatever 10-20% or whatever you want to do for if we do get like a major crash. And I feel like that's the best you can do, right? Like it's impossible to like predict these things.
Oh yeah, and actually somebody had posted out Warren Buffett's portfolio or Berkshire's portfolio from its inception and what the percentages of every company and cash were in there. And cash for them until they bought Apple and Apple took off was basically 30% cash all the time in their portfolio. Always ready for opportunities, and that's what he thrives on, is finding value companies, finding where there's value and spending money on that value.
And especially now, that's the other thing. Now that we have these high rates that we haven't had in more than a decade or multiple decades, your cash position, like we were kind of talking earlier before we hopped on here about just money market funds, can earn you 5% interest. So all of a sudden, sitting on 30% cash and stuff like that becomes more attractive, right? And you can kind of play it more conservatively and wait for big opportunities to come. I mean, that's what Warren Buffett's always done. He always waits for, the perfect opportunity. Like all through COVID and everything, they weren't really buying, but it ended up working out okay for them because we had that 2022 crash and they were buying then.
Oh yeah. Yeah, and I thought about it too. Remember when I was like just a little kid, like probably 5, 6 years old, and I got my first bank book, and I was able to look at it, and this was the early 80s, so interest rates at that time were like 13%. It was stupid high. And so I'm like looking at my bank book and I'm like, oh, I have cash in the bank and I'm making money on my cash. It's like, as a 6-year-old, I realized this. Of course, I didn't take that to further places. I wish I had. However, realizing that that's the reality that you could do right now, we're at a point where inflation is below where, a 5% CD might get you. So it is worthwhile to have it in there, and even before, when it wasn't higher, even when inflation was 8%, when you have your cash just in a savings account, you're literally losing money. Like inflation, even when it's where the Fed wants it to be, you're losing 2% on that cash every single year. So you might as well have it in something that's going to get you some sort of return. And for me, I like the CDs because for me, I do want to buy a house and it's risk-free and I roll it over every single month. So if I need that money available, it's available every month. And I have it set up as 4 different ones that, mature over different courses, times of the year. But you were showing the other day that you have this other one too. So what is it that you've got? Because that would be interesting to have also.
Yeah, so the CDs are great too. Especially, I like how like most of the time when you go to the bank, right, they want you to lock your money in 1 year, 2 year, whatever.
Yeah.
But through many brokerages, you can just do the monthly ones, like you said, and you can make like CD ladders where each month it's rolling into a new one, but at least your cash is like somewhat liquid if you need it a month from now, which is kind of reassuring. But yeah, so I've been putting a good amount of my cash sits in Fidelity's government money market fund, which is the ticker's SPAXX SPACs, but not the bad SPACs. this one's not going public. Hopefully. But yeah, I think right now the rate is just under 5%. And then it's got like a 0.42 expense ratio. So I'm basically bringing in like 4.5% in interest just on my cash. It basically just comes in as a dividend. And that's paid out monthly. So obviously the rate is annualized. So divide that by 12 and that's your monthly rate of return. It's nice. I mean, I'm not complaining, it's definitely, like I said, it now versus a few years ago when there was no interest, it pays, I think, for me at least, to have some cash on the sideline, like I said, to wait for if we do have like a major opportunity arise that just don't know when it'll be.
Right. So now with those there, like with a CD, I have to buy, one block at a time, which is $1,000 minimum. So is there a minimum that you need to go into this, or so you just toss in whatever money at any time that you want?
Yeah, no minimum. You can just kind of like have your cash either sitting in your portfolio as cash or it goes in as this. And, low risk, it's mainly in like U.S. Treasury bills and things like that. So U.S. government repurchase agreements. I'm looking at the composition here. U.S. Treasury, coupons, things of that nature, fixed rate securities. So yeah, I mean, so far so good.
All right, and then you said it pays out as a dividend. So tax-wise, how does that get taxed?
That's a good question. I'm not sure if it's like the same tax treatment as a dividend, or however, if interest on your bank account is how that all works. But I know it just kind of all piles into my short and long-term capital gains columns. So okay. I'm not sure about that.
All right, yeah, and I'll have to take a look at that too, because I know for actually I have to check the CDs, because the thing is like CDs you will get taxed by state and federal government, Treasuries, you'll only get taxed by federal. You won't get taxed by state. The problem I found with treasuries is if you want to get the highest rate, you have to put in a minimum of 15 grand into them. And you're usually like 3 months that you've got to have them in there for. So, it's nice because you don't have to pay it, but I'm like, I don't have that 15 grand to toss in there. Mine are all $5,000 blocks, and I don't want to lock up 15 grand for 3 months. So that's kind of where I'm stuck with the treasuries and the CDs right now. But yours as an option sounds pretty good too. I'll have to see, because I've got TD Ameritrade, so I'll have to see if they've got one. I would imagine they must.
Yeah, I just tried to Google it, and I got two opposite answers. One says that it's taxed as earned income, and the other one says it's taxed as investment income. So it is taxed in some way.
Well, you will find out at the end of this year when you file next year to see what it is. Oh man, what's going on, Randall? How you doing, man? Yeah, so and that's, again, for me, like, I have some these huge hyper Tesla bulls are like, oh, why aren't you all in on Tesla? And I'm like, I've never been an all-in kind of guy anyway. Like, being 72% in Tesla is very high for me to begin with. I think the risk is worth it. But then I'm like, but if I want to buy more, and I think that we're going to potentially get a great buying opportunity next year, where am I going to get this cash from? And not only that, but like, yes, I think Tesla could be the most valuable company in the world in the next 5 to 10 years. But what is that going to get me if they're not paying out dividends? Granted, like, there's plenty of jobs out there. I don't have to stay at my job. I'm not like stuck here. So that my happiness there, but it's kind of like one of these eye-opening things that a job is still a job, and you never know what anything is going to happen, and your job just decides that your life needs to change because they want to make it change. And so how can I get myself to a position where I don't have to worry about that? And as I talk about getting some FU money, and you're like, all right, well, how do I generate that? And that's kind of where this all came from, because now I have all this extra free cash flow coming in on my own. And if I see this awesome opportunity in Tesla, I'll be like, oh, hey, I could take some of that cash, throw it into Tesla stock. It's perfect. And it makes perfect sense. And, and for you guys who don't know, Vin just bought a house too. And I do want to buy a house, but, finding a place that has a lower cost of living when you have that passive income coming in, it's awesome. Because it's like, now your bills are coming down, your expenses are coming down, now you have more money to invest. It's just building that snowball up.
Yeah, definitely. Location helps if you can, work remotely or find a job, out there. Like, I'm in Delaware now, loving it, and whole lot cheaper than New York, that's for sure. I'll have to make a video on it, maybe. Financial independence, move to Delaware. Yes. But going back to what you were saying, and the reason why Tesla is 70% of my portfolio too, I just want to make clear, I've been in this since 2019. It's not like I went out and was like, all right, I'm going to be all in Tesla. It's obviously done quite well since then. And this is part of my struggle. It's I don't want to punish my winner, right? Like Peter Lynch always said, why, if the story hasn't changed, if everything's good, why would I sell any if I think the future is going to be better? So yeah, it's kind of a balancing act there. And then as far as the dividends from Tesla, it'll definitely happen eventually. I mean, maybe by 2030, somewhere in that ballpark, they're gonna be printing so much money, they're going to run out of things to do with it, and they're gonna have to do a dividend. And that's another thing to think about too, is while it might not be giving you dividends now, let's just say you get up to 100 shares of Tesla, they do 2 more splits, let's just say hypothetically between now and 2030. All of a sudden you've got 2,000 shares, eventually Tesla's paying you a dividend. All of a sudden you're getting that dividend per share. It starts to become a significant chunk of money. It may take longer than that to play out, but yeah, eventually they'll definitely pay a dividend, like we've seen with, Apple and Microsoft and the like.
Oh yeah. What's going on, Willie? Glad you could finally catch us. Yeah, that it's funny you say it, because I'm going to be having Darth Dividends on here, another guy with a YouTube channel, awesome dude. And we were talking about the same thing, which is, you go back, 10 years, 15 years when, basically the big 7 started coming up and where they are now. And of all of them, you've got Apple and Microsoft and Nvidia are really the only 3 that pay dividends out of them. And they just started. But you go back to when Warren Buffett started, and, they paid dividends, and those dividends just grew over time. And that's what it is dividend growth. So you find that, and over time, the stock will appreciate. So you're going to grow your equity there. The dividends, even if they don't pay them now, probably will pay them in the future, and those dividends will go up as well. So as you accumulate more shares, you're also going to increase your portfolio, you're going to increase your dividends, and you're going to increase your cash flow. It all goes hand in hand. And so looking at, the next round that could be doing that could be like the Amazons, the Google, NVIDIA obviously just started doing it themselves, but you're going to get some of them doing this. Now let's go 10 more years down the road. What companies now could potentially be paying dividends in 10 years? Tesla, obviously, I would say one. I think 2030, you're right on the spot there. I think that's right around when they're going to do it. I look at companies like fintech companies. Banks obviously are huge into that kind of stuff, so they're going to be right at it. So I'm like SoFi, PayPal, Block, all of these companies that are out there right now as fintech companies most likely want to be paying dividends at some point in the future. They're financial companies. That's what they want to do. So, that's kind of like, it is a bigger risk and a gamble, but looking down the road, what companies do I want to invest in now as the price is low that I think I can accumulate a lot of shares to be able to benefit from that in the future?
Yeah, definitely a lot there. Like, yeah, dividends are great. The ones that grow their dividend are even better. Because, that's where you get this massive snowball over time. Dividends are the long game, right? Like, you're not making a ton today, but if you're investing in the right companies, a company growing its dividend 5% a year over 10 years, like all of a sudden you start to get these stupid yield on costs, right? And this is like what Warren Buffett did. His Coca-Cola yield on cost, I forget the exact number. It's something ridiculous. Like it might be like 50% or more of whatever the original amount he invested. The yield today would be like, obviously Coca-Cola's dividends a few percent, but if you just look at his buy price and the dividend growth, so that's exciting. Not many places you can get like 50% yield on your money every year when you look at it that way. Yeah, and something else I'm trying to work through right now too is I have like 3 portfolios, and they've all over time just become inevitably like a cluster F of Tesla shares and like a bunch of stuff. But I think I'm going to actually sit down and try and like make a dividend portfolio. Or another thing I was thinking about was maybe starting a new portfolio from scratch, content the shit out of it, and do like 0 to 100,000 or whatever, something like that. And you mentioned a bunch of great companies there. Like Amazon is one that I actually started buying a few months ago as well. I really like Amazon. I didn't quite catch the bottom. I got it at like 115, I think, but that's another one that I think is probably my second favorite right now to Tesla. That I just think it's a no-brainer. I think that like they're kind of coming out of an investment cycle where they're about to start printing a stupid amount of money, and I just don't see, when you look, if you're a long-term investor, 2030, what are the companies that are going to be around? Amazon's up there. Like, I don't know about you guys, I buy a lot of stuff off of Amazon. I just have it on like subscribe and save. It's just mindlessly, here, Andy Jassy, take all my money. And then like on top of that, they just have a lot of exciting things going on that I don't think people realize. Outside of obviously the core retail business, you've got like this massive advertising business starting to form. They've got obviously AWS, and they're doing a lot with AI that like I don't think is getting a lot of credit, but that's something too that the CEO Andy Jassy has been saying, how like while people think AI, we're thinking NVIDIA and companies like Microsoft. They've been investing into AI for a few years now. They've got like inference and machine learning chips. So they're doing a lot. I think that's a sleeper AI play. I actually just made a video on a few of my AI picks. So that was one. Tesla, obviously. There was another one in there if people want to check that out. But I really like that company. And these are the companies that 10 years from now are going to pay the dividends. And
Oh, yeah. And I thought about it the other day because somebody had posted a timeline video of Amazon stock trading versus I want to say it was Apple, and the fact that like Apple just kept going up and up and up, and Amazon just compared to it never did. And I'm like, but it should have, and it didn't. So as far as I'm concerned, Amazon is still a bargain right now. So like you, just recently I started up a position in Amazon, and I've got a dollar cost average going for it. So I'm just buying every single week into it because I think the same thing. And I'm like, eventually it's going to be taking off. And eventually it's going to be paying dividends at some point. I look at the fact that we have, those big 7 will be the next ones, like the Coca-Colas, like the Bank of America, like all the Warren Buffett plays will eventually be these guys. And they're going to be printing money and continuously growing every single year. May not have the same growth percentage that like a Tesla would have, but they're still going to be growing, and they're going to be growing dividends, and they're going to be growing their everything along the way for you to be able to snowball like that. And then I also look at, there's a lot of awesome dividend plays out there right now that have been staples for the last 30, 40 years. Some of them may get disrupted. Some of them are going to be good enough where they're going to be able to make adjustments and they'll be fine. But I also look at, like oil companies. I think they'll be fine. Some are in natural gas and they've done well enough for themselves and they're not stupid. So they're going to clearly see this coming and make changes. But which ones of those are going to get disrupted and not be as potent as before and start that downward spiral? And who's going to come in and take over and take those places? Like, electric companies, things like that are going to be coming up. And again, Tesla with their energy, just another one that's coming in to take it over. So to your point, I think it's exactly just that. I think the next 10 years, we're going to see a lot of these new companies coming up that could potentially be paying dividends, and you're going to want to be in them.
Yeah, and I think, like you mentioned, the Magnificent Seven there. I think if you take Tesla out of the picture for a second, because obviously like that would be my first pick, but with the rest of them, I think a company like Amazon, to me, it has the biggest moat of all of them. And like you said, it hasn't really, Apple's up to like 3 trillion market cap. Amazon's only like 1.3. It hasn't really moved with the rest of them. And yet it's also the only one, like compared to Apple, at least they're showing growth, right? Like Apple has had 3 quarters now of their trailing 12-month revenue has declined. Amazon's showing double-digit, growth overall in the same time frame. So, yeah, I really like that pick. And then, yeah, you mentioned stuff like oil. I've been thinking about, I definitely have to do more research just because not familiar with the industry, but I almost just wonder, like, there was this whole crazy hype cycle where we were all, told like, oh, oil's dead, like it's going away. It's not going anywhere for the next at least 5-10 years. Like we need it, because even if like the best case scenario for companies like Tesla and Enphase and all these other ones, the grid is not there, right? The problem is still getting this power around. So we're going to need oil like minimum another 10 years. And you could almost start to make a contrarian play. And you see like in a year 2022, when Tesla was down 70%, I think Exxon was like up 60 or 70%. So that's something.
He bought Occidental and the thing skyrocketed.
Yeah, that's another great one. And yeah, he keeps buying more and more. They keep talking about, is he going to just buy the company outright? But yeah, I have to do some more homework. But, these 8% dividend yields, almost acting as like a hedge in the bad times. I don't know. It's enticing to, maybe you take 1% of your portfolio, and then in those years where if it does happen again, right, history doesn't repeat, but it does tend to rhyme. You take that gain in your oil play and you dump it into Tesla at the low. That's just kind of how I'm starting to think about it.
So that's actually something I did in my portfolio. I've got all my spreadsheets made up. And with my spreadsheets that are there, I can see, I have ones that are, intentionally there that offset each other to hedge each other on both ends. And I can see, hey, this one's up 5%, this other one's down 5%. All right, cool. Well, when do I think that trend is going to change? I could take the money from one and put it in the other and swing it back and forth. So people who are swing traders, if you just simply set up a spreadsheet like that, or if your platform allows you to see it that way, you can see which ones are up and which ones are down. You just follow the charts, and it's not always going to be exactly right. But, if you kind of understand how it all swings and you're like, we're kind of near the bottom, let me flip-flop that money, you can really win on both ends of the spectrum. It's really awesome. And then going back to your point about, Amazon, thinking about the fact that they're growing as much as they are a very disruptive company, as we know. We still have companies like Best Buys that are out there, which eventually won't be. Like, why would anybody be going to a Best Buy to buy this stuff when you can get it on Amazon? Amazon is getting faster and cheaper with everything that they've got. You can get, especially with Prime stuff, almost next day. So why would you spend time going to the store? You're spending gas, or in the future, electricity, to go to the store to get this stuff. Most people don't want to deal with crowds and all the BS anyway. So just order it and have it shipped to your house. So that hasn't even fully taken effect yet. And that we're going to start seeing over the next decade.
Yeah, it's funny that Tesla and Amazon, I think, are like they have a lot of similarities. It's really interesting. And like you said, Amazon just keeps moving into new verticals. I was just talking to a couple people in the healthcare industry a few days ago, Amazon Pharmacy is growing at a
Oh yeah.
huge rate. Like I think now they have something where you can for primary care, it's like $200 a year. You know, telehealth type stuff. They're doing everything, and they're going to start giving like CVS even a run for their money because they're going to have these prescriptions for a lot cheaper, right? So yeah, a lot. There is a big market out there, and that's one of the companies poised to capitalize, I believe.
Oh yeah, we'll get back to that in a second. Quick question here. CD's RCA, it is a certificate of deposit. Certificate of deposit is what it stands for. So it's really just basically you're giving money to a bank, and the bank is going to give you an interest rate in return. That's all.
The bank goes and takes your money, makes 20%, and they cut you in for maybe 4 or 5%.
Exactly. So, and the way I look at it is like, hey, it's win-win. Sure, the bank is going to win more than me, but who cares? Whatever. I'm still winning as well, and that's all that matters. So going back to your point about the pharmacies with Amazon, again, like you said with, FSD, I think, and I've been saying it since the beginning, I talked to my dad about it the other day, FSD is going to be the biggest benefit to older people first, because these people, a lot of them, they don't want to drive. Like, yeah, you're driving around, you're so mad, it's like, that must be an old person driving. And it is, but guess what? They probably don't even want to be on the road. They don't feel comfortable driving, but they have to get to these places. They have to get to doctor's appointments. They have to get to the pharmacy. Whatever it is, they have to go out there. So they don't want to drive. So FSD is truly going to help them the most. And then if you've got Amazon Pharmacy as well, now they don't even have to go to the pharmacy. They'll just have it delivered right to their house. So that's going to be huge going forward. And then especially when you get the metaverse that comes out, I have no doubt Amazon's going to have some sort of metaverse platform that now you can go and shop in the metaverse. And that change is coming over the next decade, and it's going to shock a lot of people.
Yeah, as far as like the Teslas, there's FSD, and then there's also the safety aspect that I was just talking to a guy the other day. He was saying like he has a Tesla Model Y. It's his second Tesla, right? And he was telling me how I think in like 2019 or so, he got into a really bad car accident. I think he had a Model 3 at the time. And he got hit like on the driver's side, right? Like really bad. The other car like flipped. It was like not good. He was like all banged up, a couple broken ribs and stuff. But he walked away from it, and he's doing fine now. And I really just wonder, like, if it was a different car, if the story would be different, because Tesla's making the safest cars on the road, and it ain't getting talked about too much. But eventually, people will wake up to that fact. People with kids, people with, anyone, if you value your life or anyone's life, why would you not want to buy the car that is the safest? So I think that's a huge selling point as well.
Oh, yeah.
And then it's funny you bring up the metaverse. Like something I've been thinking about lately is I feel like we've entered now, we're in this AI hype cycle. Is this going to be like the metaverse here today, gone tomorrow? Like it was the bees knees for 12 months, like crypto, all these little bubbles that came and went. But what do you think with like AI? Is this something here to stay, or is it going to be people be on to the next thing in 12 months?
Oh, no, it's here to stay. But I think it's going to be very much like the .com bubble. I think what's going to end up happening is we're going to see all of the potential for what AI could bring us, but it won't be here in reality. I don't think it's going to be. So the .com bubble obviously happened a lot because there were a lot of shell companies that didn't exist, and people were making money off of that. So I don't think that's going to happen. But I think there's going to be a lot of companies out there that are going to be hyping what they can do for AI, but there's only going to be a few that are actually going to be successful with it and utilizing it as far as really driving it forward. And there's going to be, everybody's going to utilize it, but who's actually going to be driving it forward with AI? I think it's the future for sure. No questions asked. But I think we may be in a bubble of excitement, and then we may kind of pop that a little bit in the next 12 months just until it really gets going. And let's see what the actual functionality and usage is of it. Because very much like, kind of like Tesla back in 2020, hey, all of this awesome stuff for the future for Tesla, but it's not here yet. And I think that's similar to what we're going to see with AI is all of these awesome potentials we have for the future, but it's not here yet. And then I think we'll come back down to reality. And then over time, we will get there. So I think AI is going to be the future for us.
I have a really interesting chart for this. I just sent it to you if you want to pull it up. I think it kind of give us some insights into how this whole AI cycle is going to play out. And I was talking about this in the last video I posted briefly. But so it's basically a chart of how the monetization went for when the mobile internet came out. So, going back to like 2012 timeframe, the order that everything went down, you had kind of the same thing is happening today, right? First, it was like the semiconductor type companies were to profit, which back then it was like Qualcomm and ARM, because obviously, they're making a lot of the chips for the things like the iPhone. Today, obviously, we're seeing NVIDIA is capturing a lot of the attention, kind of a bet on AI being here to stay, and there being demand for this type of stuff, for the infrastructure. They're kind of like the picks and the shovels of the gold rush here. But then the next companies that really prospered, like as far as their stocks really went up, here you go, perfect, was Samsung and Apple, obviously smartphones. And then later on, it was Google and Amazon, who it's just kind of layer on layer on layer, as you can see here. And it starts with the semiconductors. So, this cycle with the mobile internet took a couple years to more like almost a decade to fully play out, right? But the first few years, you can kind of see Qualcomm and ARM, the semiconductor companies, captured the lion's share. Those stocks performed the best. Then in the middle, it was Apple and Samsung. They started to, reap the benefits. And then later, Google and Amazon, because they're building the layers on top of the second layer. So this kind of got me thinking a lot about, where companies fit into this. If we were to draw the same chart for today, I think semiconductors, obviously NVIDIA is the big winner right now. But what's next? The infrastructure and devices, that's where I see a company like Tesla, obviously starting to prosper, and maybe this time it's a little different because Tesla is doing both infrastructure devices as well as the software and services, because they've got these robots on wheels, they've got full self-driving, they've got the bot. It's kind of combining both of these, so kind of gives you an idea. I think it was interesting to me, at least. It's obviously going to take years to fully play out, but kind of just gets you thinking, what are the companies that'll do well in the short term, medium, and maybe over the long run. But thought it was really interesting.
And then you think about too is, just looking at the direction that we're going. Obviously, everybody's moving towards EVs. We're most likely moving towards AI. This is the future. So like you said, you look at a chart like this and you say, well, what companies should I be investing in? What is the future looking like? So, you can go with, like you said, NVIDIA is great. AMD, I think, is an awesome company that's going to do very well in the future as well. You take a look at those, and like you said, all three colors here, semiconductors, maybe not, but possibly for Tesla. So Tesla can literally be all three of these themselves and be their own graph for themselves. They could be part of all of this because they're going to have the infrastructure and devices. They do have the software, especially if they're going to be licensing out FSD, and if they're going to have AWS, a service like that, like Amazon has. That's going to be these two here, the two biggest ones. Tesla could play a major role in, and they are making their own chips. Whether it's going to be something that they're going to be able to utilize and sell to others, who knows? But at least these other two, I think they could have a great chance of being, 2/3 of that massive piece right there.
Yeah, and I think the other thing that's cool with a company like Tesla is, let's just extrapolate this out to the next 10 years, right? They have so many divisions that obviously it's going to be volatile, but for the most part, if all goes well, this should just be up and to the right, where they're going to be benefiting from every stage no matter what, because in the meantime, they've got this huge auto business that's doing great. So even if the AI stuff doesn't really materialize into a huge portion of the business and the revenue for a few years, they've got what they need to carry them through there. And I bet you in that time frame, they're going to come up with lots of other things as well. So definitely seems like a safe bet on the next 10 years and how this whole AI cycle can potentially play out, because you're kind of getting exposure to multiple parts of the cycle.
Oh, yeah. And then thinking about this graph as well, you see infrastructure. So Apple obviously isn't making any money on electricity that's going to be charging their devices. But Tesla could. If Tesla's got the mega packs and all of that coming out, think about where would, energy fall into all of this. That's a whole extra layer that Tesla's going to have that isn't even part of this graph. So, that it's just mind-boggling as to the potential of what Tesla is going to have. That's unbelievable. Thanks for sharing that, Vin. That's great.
Yeah, for sure. Yeah, like I said, history doesn't repeat, but it rhymes, right? So Figure you could
Yeah,
give
and
us a
it's
little bit of
and,
insight.
seriously, and looking at what Elon's been putting together, like it is the total package. It, like talk about vertical integration. Like they have the solutions for everything. Like you don't have to worry about it. Hey, is there a power outage? Tesla's got it. Cool. All right. Well, how come I can't run my car? Don't worry about it. Tesla's got your power walls. Cool. And you're like, literally everything that they have, they control, and they do it better than anyone else. So, like Legacy Auto, they rely on third-party services for so much stuff. They outsource to everybody for everything. Tesla doesn't, and they're getting less and less of that. Like they do it because they have to, but they're trying to get away from it. So, when you have control of everything in your business, it's so easy to streamline and move forward like Tesla does.
Yeah, and I think that's the most important part is how agile they are, and there's just so many advantages that come from, again, going back to that pace of iteration and the pace of change. Because they do all these things in house, it just leads to all these other opportunities that wouldn't have otherwise come around, right? If Tesla operated more like a traditional company, probably would still just be an auto business, and that would be it. But because they did all this stuff in house, they realized, oh, we can get into batteries. Oh, we can get into storage. Oh, we can get into this and that. And it's just a flywheel. It's like I said, like who knows? Right now it's AI, but the next 5-10 years, like they're gonna discover other avenues that for things that they need that no one else is doing, and then those become the future products. So yeah, it's a very exciting company for sure.
Oh yeah, and think about like Optimus. 2 years ago, Optimus wasn't even on the radar until all of a sudden Elon's like, huh, look at that. I think that could work. Let's do it. And then just do it. And that's the whole thing about Tesla is Elon's like, hey, I think this would be good. Let's do it. And they just do it. Like there's no, hey, we're going to plan this out. We're going to do this and that. We're like, hey, let's do this. This is a great idea. Do it. And like you said, if that just came out of nowhere, who knows what's going to happen in 5 years? Who knows where the world is going to be? And at that point, Tesla's going to be like, oh, you know what? That's a great thing that we can do. Let's do it. So when you go back to, so when you go back to, when are they going to pay dividends out? Obviously, if they have so much cash, I've had discussions back and forth. People don't want Tesla to do buybacks and dividends because they should be spending that money on innovation. Fully agree, 100%. And that's how Tesla and Elon feel as well. Every single penny should be spent towards innovation. However, they are at some point, and they recognized it last year before the interest rates really started going up higher, was they have so much money coming in that what can you do with it? Because like we talked about before, if you have money just sitting in cash, you're actually losing money. So they have invested some of it as well to be able to get some sort of return on it. But if they can do something to bring it, give it back to the shareholders as well, that would make sense also, because at that point, that incentivizes institutions and bigger money now that they have the credit rating that they want, and that's going to continue to go up. So when you have investment grade rating, more institutions are going to invest. When you start doing buybacks, even more institutions will give you money. So for them, it's not just a matter of, hey, let's put our money into, give it back to the shareholders. It's we give it to the shareholders, and now even bigger money shareholders invest in them. So they kind of get more of a return on their investment because they're doing the buybacks, and us as retail holders benefit from it also. So that's kind of where it's at, is all of excess money. And I think the reason we haven't seen it yet is, one, because they've been dropping prices on the vehicles. They don't know what the macro environment's going to look like. And they have come up with things to spend the money on. Highland, Cybertruck, Megapacks, 2 new gigafactories that are going to be coming up. So they have found things to spend the money on. But they will get to a point where they won't have anything to spend their money on. That's when we're going to get the buyback. And I think that'll probably come in Q3 of next year. And then eventually end of the decade, if Optimus is up and running, I mean, again, we don't know what else they're going to find to spend their money on, but they're going to have so much money coming in from FSD, energy, EVs, Optimus at that point. They've got to do something with their money. So putting into dividends maybe may make sense.
Yeah, definitely a lot. What do you, to take the other angle, put you in the hot seat a little bit, is there anything that worries you about Tesla?
I mean, obviously Elon's well-being always, but literally every day that goes by, I think that becomes less and less, because they've already proven, especially when we had Investor Day, that the team that they have in place there, and Elon has said many times, it's not him that's doing everything. Yeah, he's the guy at the front. He's the guy who is, you see on the top, he's the cheerleader and really pushing everything forward. But very much like Steve Jobs, when he passed away, the company still did fine without him. I don't know if Tesla's at that point yet, but they're getting pretty close. And every day we go by, we get closer to that. So I think the key man risk is minimizing as the days go on. Other than that, I think the only concern I would have would be, like Elon said, if they don't solve FSD, the company will be worth nothing. Like you said, I don't think it's going to be worth nothing, but somebody is going to solve this. And that's what it comes down to. And they know that there's a lot of competition in China, and China's doing quite well trying to come up with autonomy solutions. So if Tesla doesn't get there, then they in turn will end up having to license it from someone else. So that I wouldn't say is a concern of mine, but they won't become this massive. I think they won't become the biggest company in the world if they don't solve it. So I think that to me is it. So they're still going to be a great company. I would not mind being invested in them, but not having FSD being solved, I think is probably the biggest factor. And I think that's where Elon was going with that when he said it was somebody's going to solve it, and whoever solves it and does the best job with it is going to end up licensing it and get the lion's share of this. And if Tesla doesn't, they're going to end up having to pay for it versus getting paid for it.
Yeah, I definitely agree. And I think with as far as Elon goes, like you said, the more time that passes, it's definitely the company's just getting stronger. But I do also think at the same time, like the most important thing is the pace of change, the pace of iteration. And without him, I think over time, you would see that slowly start to go away and Tesla become just like many of these other companies, kind of like what you've seen. Look at like all the big tech companies, right? Apple, Google, they're still great. They're still the biggest companies in the world. But what have they really innovated on and done in the last like decade? Like the last major breakthrough product Apple had, I mean, we've got little things, but it was the iPhone, right? Like, and then obviously they're a great company. They're getting into other things, but I'm sure the culture is a lot different now than it was, maybe under someone like Steve Jobs even. So that's something I've been thinking about. But yeah, like you said, the longer he's there, I mean, they're just getting into a stronger position.
Yeah, and I mean, and obviously, Apple, the biggest change Apple had most recently, I think, was the App Store in 2013, and that was really the game changer for Apple. And since then, they've just kind of expanded on that. But again, nothing groundbreaking. So, and I don't know if you saw recently, Tesla does have kind of on the down low their own App Store as well. And it's going to end up coming up and be very much the same. And, now X is on the home screen when you get into your Tesla. I knew that was coming as well. So you're going to get to a point where you're going to get into your Tesla, especially if it has FSD and you're driving around not having to pay attention. You're going to have this whole App Store at your disposal while your car is driving you. So, that's a whole revenue stream that Tesla's going to have that a lot of people aren't seeing yet because it's not there yet. Here we go, Lang. Yeah, Tesla down today. What's the cause? Here you go. The stock market hates the news. So realistically, it's down because Tesla did drop prices, and anytime any company drops prices, that means revenue is going to be coming down. So because S and X came down, which again is awesome because now they can increase the number of vehicles on the road and they qualify for the EV tax credit. So that, and then dropping the price of FSD. So mentally, Wall Street is seeing, they dropped the price. That's $3,000 less per person that's going to be getting FSD. What they're not taking into account is how is that going to change the take rate on FSD? If you have more people who are able to afford the vehicles and more people that are going to be able to purchase FSD, you put that hand in hand with the Model S and the X. I'm sure somebody buying a Model 3 for $28,000 is not going to be okay with spending $12,000 on FSD. But somebody who's going to be buying the Model S, now that they're saving 19% on that vehicle, may be more apt to pick up FSD on that vehicle instead. So for Tesla, that is now $12,000 in basically pure profit that they're going to get because they dropped the price of the Model S. That's not what Wall Street's picking up on. They just see price drop, dropping revenues. That's it.
Yeah, that's definitely a great point. And I mean, they've kind of said it, alluded to that. But yeah, when you think about it, so they may not be getting the revenue today, but they're going to collect it in the long run if FSD works out, just in a different form. So it's almost deferred revenue in that regard. That's interesting. Yeah.
Yeah, and it's going to happen. So I have no doubt that all this stuff, and that's the whole thing is I want to see the take rate, and we never get to see the take rate on all of this. It's kind of just a rough number of what we think. But then don't forget too, them dropping the price on it, it's by the end of this year, we're going to have FSD internationally. That's my guess. They haven't confirmed it, but it's most likely coming to Europe and China, at least. Those two are going to be seeing FSD by the end of this year, probably Japan as well. And if that's the case, they need to make sure that the FSD pricing is going to be realistic for all of the places that they're going to have this in. And don't forget, there's a lot of vehicles in China right now that have been sold. A lot of Teslas over there that don't have FSD turned on. As soon as you turn it on, massive revenue stream coming in. So that there is going to be a game changer when that happens end of this year. So as Vin said, even if we get a huge macro drop next year, the things that could be happening for Tesla on the bottom line when it comes to FSD could actually be positive for Tesla next year. You never know how it's going to affect it. Let's see. Are you investing in X Corp? I mean, when I get that chance, I will. I know Elon, somebody had posted over on X asking about that, you know, what they think it would IPO as, and if it would be more than the $44 billion that Elon paid for it. And he says, hopefully. So I have no doubt with the way he's been running X right now, I have no doubt that when it IPOs, it's going to be worth more than what he paid for it. What do you think, Ben?
Yeah, I mean, it's definitely improving quickly. Like, they've got all kinds of crazy new features. I think it's going to turn to a money printing machine. I would definitely invest when the day comes.
Oh, yeah.
But I don't think, we definitely have like a few years at least on it going public at least.
Yeah, I would say 2025 or 2026 are going to be the years that we probably end up seeing it go public. That would be my guess. Model 3 costs. The original cost, no. So and I can't even actually, I wonder if I could bring it up. No. So the Model 3 right now for me is 27 grand. Actually, I can, let me do this. I'll bring up, I'll just go to tesla.com.
The Highland the price went up, right?
It went up a little bit, yeah. So right now that 29,740, that is with potential savings. So if we go into here, so just looking at the actual purchase price, and I do not believe this is not reflecting the Highland prices, but this is the current price. So just a regular rear wheel drive is 40 grand, 47 for the long range, and 53 for the performance. So those are the current prices right now. Sounds like in China, the price for the Highland went up a little bit. I think it was like 20,000 yuan maybe. So wasn't a ton, but it was noticeable over there. But, you know, as was pointed out, the cost for making the vehicle has come down significantly. So I have no doubt they went up on the price a little bit because they haven't hit economies of scale yet. And then as soon as they hit economies of scale, we'll see the pricing coming down on it. You know, and it was nice to see how they rolled it this year, or with this Model 3, to avoid the Osborne effect. And I think this is exactly what we're going to see with the next gen platform, which is we're not going to hear anything official about it until it's actually ready to hit the ground for sale. And they're going to be like, here it is, it's for sale right now. And that is, I think, how they're going to end up doing it. Because otherwise, if they announce it and say, hey, we have a $22,000 Tesla coming out in 3 months, they're going to lose 3 months worth of sales on the Model S. And that's it, because people are going to wait. Let's see. Yeah. Okay. So Hanif, yeah. So the configurator has not been updated in Canada yet. Looks like in China it has been updated. I don't know if it's been updated anywhere else. Actually, if anybody is from Europe, let us know if it's done over there, because I know I've been hearing about that. Australia might have it also. But I think the reason we're not going to see it here in the US and Canada right away is because they're going to wait for Fremont to get turned over to the Highland, and then we'll have it turned on over here, and they'll have Fremont supply us, and China's going to supply China and the rest of the world. That's my thoughts on it. Let me see. Lang, quick question you had. Next week I start my new job. My new job, little side tangent, personal side. The way my job has been doing it to me, I am changing. So my pay changes next week. However, the first 2 days, so Monday we're off because of Labor Day. So Tuesday and Wednesday I get to do my current job and fulfill those current regular duties, but getting paid significantly less for it. And then Thursday and Friday of next week, I go to my new position, which is a longer commute and much less pay. So super sucky, but yeah, next week it all starts. And Hanif, I have been utilizing your slogan, potential financial suggestion. So then we've got that going. It's not financial advice, but it's a potential financial suggestion. And I use it all the time over on X.
What's that?
So Hanif one day, because we always have to say not financial advice because we don't want to get sued by people who are stupid. And so Hanif came up with the potential financial suggestion. So that we can say. This is not advice, but it's a potential financial suggestion that you may want to take for the future. I gotta make that shirt up too. That's awesome. I love that. Oh man. So Cybertruck, Vin, when do you think we're gonna hear about that? I mean, I figured we hear about Highland first, which now we have. So when do you think we're gonna get Cybertruck news?
Yeah, I mean, it's got to be next. We're eyeing like a Q3 potentially delivery date, or at least some sort of event, right? I mean, starting to see more and more of them out there. They're in New Zealand, right? They're in Texas. I mean, definitely seems like it's progressing and getting close. So clock's ticking though. Hopefully no more delays on that. I would hope Q3 we get it. What do you think?
So judging by what Elon said, so we've of course seen the tractor trailers with all of the Cybertrucks on them, but then Elon comes out afterwards and says, yeah, those are like the pre-production ones. Those are the ones that are going to be going to, employees and other people like that. But he said he is now driving around the actual production version of it. So it sounds like they're probably going to start true production on it soon. So we may get that delivery event with all of those pre-production ones. I guess a lot of those are going to a lot of the dealership, or not dealerships, but the delivery centers. So it sounds like a lot of those are going to delivery centers, which I have one 2 minutes down the road from me right now. So I'd love to see them get one so I can go check it out. And I think that's what's going to happen. So I think they're going to start production. So I've been guessing end of September, beginning of October, we actually get that event. Obviously, we know that they've been giving out the passes to the event, and they said it should be in 3 to 4 weeks, which lines up with end of the month. So I have a feeling it's still going to hold true end of September, beginning of October. Sometime soon, we're going to be hearing about that. They'll probably announce it maybe the next week, with Highland coming out now to keep this positive momentum going. Looking at the whole stock market, I think we're at a place right now where the whole market's going to run. Would make a lot of sense for Tesla to announce it, and that could potentially help us run and offset this. I mean, I don't even know where we're at right now in the stock market, but what's the stock price looking like right now, guys? I know we were down 5%.
It's tanking today. Yeah, I didn't even realize it's already September 1st. Rabbit. And yeah, I guess I don't know, maybe it's going to be Q4 because they would only have like 30 days, unless, like you said, something this month. Who knows?
Yeah, and again, I am not looking for any major impact or significant amount of production from the Cybertruck this year at all. If Tesla can pump out 2,000 or 3,000, maybe 5,000 of them by the end of the year, that would be awesome. Like, I will take that. But you're thinking, I mean, realistically, it's going to be, 1 quarter's worth of production. And if you look back at what, Austin did for the Model Y when they first started up, their first quarter of production was not anything to write home about, But again, this is a brand new vehicle that they've never done before. They're going to have a lot of kinks that they need to work out. Totally fine. And again, that's where I think we're going to have an exciting pop on the initial news. It's going to be great. We're going to ride that whole train. And then when the actual reality of, slow production kicks in, it may fade off after that. But either way, you look at it actual true long-term and not like 6-month long-term, it's going to be awesome. Looks like we're down 5.6%. I love it. Awesome Tesla news. Let's tank the stock.
I was thinking about putting a Cybertruck pre-order today. When do you think I would get it? 2027?
You know what, Vin? I'm like 1.2 million on the list, and I'm guessing 2026 for myself. So I think they're at about almost 2 million pre-orders now. I'm guessing that they'll announce the Cyber van. I will put in a pre-order for that immediately, and might get that before I get the Cybertruck. I'm not sure.
At this rate, yeah.
I mean, like as Elon said, they're looking at 250, maybe 500,000 per year. So even if they hit 500,000 per year, that's not happening till 2025. So I would say for me, 2026 at the earliest is when I'm going to end up seeing it.
Yeah, I'm looking at like the F-150 Lightning production here, and so that's been out since almost coming up on a year here. And July looks like they did maybe 15K. So it is definitely going to be a long time till we see a million or even 100,000.
Oh yeah, and I mean obviously Tesla moves at a significantly faster pace than Ford does, but still, you know, Elon, and at least Elon was pretty open and honest with it. He goes, look, it's going to be slow to start. The production's going to be slow. When we do start, it's going to be slow. So if people aren't paying attention to that, please step back and pay attention to that. It's going to be slow to start production. Tovi, yeah, down 5.5% with the great news. Yeah, that's because we want to buy more. We asked for a great price on great news, and that's what we got. So that's all. It's because of the fact that they see prices dropping. So the Highland means absolutely nothing to them because they cannot quantify the actual cost savings on the vehicle because it has not been announced. So having the new vehicle out there is awesome, but seeing two other vehicles and FSD getting a price drop on it, not awesome for Wall Street. But hey, I'll take the deal. I'll buy more for less. I have no problems with that.
Yeah, we'll do the Tesla stock buybacks. We got it.
Yeah, absolutely. I have no problems there. Oh man. All right, we're pushing an hour here, Vin. You got anything else for us today? What else you want to talk about? Anything?
Ooh, I think that was it. We covered a lot today.
Oh, we did, yeah. So, all right, guys, we're gonna call it a day here. Awesome, Vin. Thank you so much for jumping on again. Glad you could join us. If you guys don't follow Vin, he has an awesome. Shoot yourself out there. So Substack. If you guys like reading, his Substacks are awesome. So where else are you at, Vin?
Yeah, I'm also on YouTube, Investment Club. You could find all my stuff linked there. But yeah, appreciate you having me on. Always a pleasure. Go Tesla.
Absolutely. All right, guys, have yourselves a great one. Have a great weekend. I got a couple of videos coming out for you guys this weekend as well. So we'll see you there. Otherwise, enjoy it. Great weather here in New England. Have a good one, guys.